Welcome to TradingPennies.com Chart of the Week, where every week we will examine the trading strategy behind one of our explosive daily stock picks. All of our strategies are covered in detail in our manual, Learn How Professionals Trade the Penny Stock Market, available on our site at trading-pennies.com. In our first video in this series, we demonstrated how to use information available on websites to develop your initial stock watch list. In the second video, we showed you how to set up multiple time frame charts using moving averages most commonly used by professional traders. In this video, we're going to continue to look at the 6 most profitable chart patterns that you need to become familiar with to become successful trading the penny stock market. Today, we're going to look at one of the most consistently profitable of patterns, the cup and handle. The cup and handle pattern is named because of the shape resembles the outline of a coffee cup. There are 5 aspects of the cup and handle pattern. The left side of the cup, the base of the cup, the right side of the cup, the handle of the cup, and the breakout of the handle high. Let's look at this in a little bit more detail. The left side of the cup. The high of the left side of the cup is usually formed from a prior advance in the stock, and optimally you'd like to see at least a 30% move. And the left side of the cup represents a pullback from that high. The left side of the cup often shows a lot of volatility in both the daily price range and volume as buyers and sellers jockey for control. While increased volatility is expected, we don't like to see a gap down off the prior high, as these generally represent volume climax sell-offs and are often found on the 4th stage of a stock's advance, and thus the breakouts, if they occur, rarely succeed. If the cup is formed from a prior advance, you do not want to see a pullback greater than 20 to 30% from the left side high. The base. The left side of the forming vase will demonstrate greater volatility in both price range and volume, but this should decrease in the formation of the right side of the base, which should demonstrate a tightening. A proper base will demonstrate a greater number of up days where volume was greater when the stock closing higher than down days where the volume was greater when the stock closed lower, as this is a sign of accumulation. The right side of the cup. The right side of the cup should show stability and order, with volume increasing on up days and decreasing on pullbacks. The high of the right side of the cup will form slightly below, at, or slightly above the high of the left side of the cup. The handle. The handle of the cup represents a pullback from the right side high of the cup. A properly formed handle should drift downward along the price lows or demonstrate a shakeout, which is a quick drop in price below the prior low that closes in the upper half of the day's range. A proper handle should form in the upper half of the cup and not decline more than 10 to 20% in price from the right side cup high. Volume should decrease along the handle formation, or the handle should become tight with little price change. A handle that is wide and loose or that wedge upward along their lows are faulty and frequently fail. The breakout. The classic breakout and entry point is when the stock breaks the high of the handle on significant volume. With significant, we mean 50% greater than the average daily volume. Breakouts on little volume should be suspect. Cup and handle patterns occur in all time frames, and one should look for some basics with regards to each of them. On the intraday charts, we look for this pattern to develop over a minimum of 10 to 20 days. On the daily chart, we look for these to develop over a 6-week period minimum, with the handles developing over a period of at least 1 week. Since we do not look at penny stocks as investment vehicles, we generally do not look into this pattern development in the monthly chart for a long-term hold, but instead use the month chart looking for the development of this pattern, looking for other plays in both the daily and intraday charts to take advantage of. As a trader, armed with this new information, as the stock develops a cup and handle pattern, we want to put these stocks in our watch list, as they may prove to be a very profitable trade in either case. Until next week, from trading-pennies.com, this is Thomas McClellan, where our goal is to help you learn to become successful trading the penny stock market.